Segment BIS Commodities, taking a look at the markets for the week, some closing comments. Let's take a look where things finished for the week. We'll start with corn. March corn closed up about 5 cents on the week, did close up 5 cents on the week at $4.29. March soybeans closed 32 cents down on the week at $12.84. March wheat up a couple cents this week at $5.65. The bullish cattle run continues up $3 on the week at $143.40 in the February contract, and February hogs up 20 cents on the week at $86.37. Corn market continues to be in a big hurry to go nowhere. We're seeing 4 or 5 cent trading ranges on the day, 5 cent trading range on the week, obviously. We did see a little bit of firming of the spreads this week, suggests maybe a little bit of end user extending coverage out there. CIF basis was a little firmer on the week as well. Cash basis steady pretty much for most of the week. Again, as a whole, probably continue to look for a pretty choppy sideways trade for the foreseeable future. Technically, 435 should provide some resistance on the upside in the March contract, whereas 420 should provide an area of support. Beans, a lot more volatility in the soybean market. The spreads were very volatile this week as well, the old crop, new crop spreads, and probably will continue to be volatile with rumors of Chinese cancellations. And we did see earlier this week in one day taking out the 20, 50, and 100-day moving average in the March contract. Rumored that China was canceling or rolling some sales contracts to Brazil. We did see the CIF basis soften, so it led to the sell-off. But unfortunately, or I shouldn't say unfortunately, but we did not see a confirmation of Chinese cancellations. And in fact, export sales this week were tremendous. 1.7 million metric ton, 7 million metric ton of that coming in old crop beans, which is why we did see the supportive finish today. Keep an eye on the daily sales announcements from China. And also the other thing is weather. We did see some better than expected rains this week, and the driest parts of Argentina did receive very good coverage this week. There's a little bit of concern in the central and specifically northeastern part of Brazil for some drier weather, but harvest is progressing in those areas, specifically in the northeastern part of Brazil. Technically, in the March contract, expect some resistance to form in that $13 area, and that 1260 area did find some support today. On to the livestock markets. Cattle continued its surge higher this week. We did post new highs in the February contract, only to close a little bit weaker on the day. Record-setting boxes. We did see the choice and select set all-time highs daily this week. Wednesday did hit the high. We did see the choice trade over $240, and the strength in the futures is coming from that, as well as the very strong cash trade. 147 out west this week, cash trade recorded. 240 in the meats here in the Corn Belt. Continues to continue to support the cattle market. We did have a cattle on feed report come out this afternoon, and the estimate was, the average guess was 94% for cattle on feed. The actual was 95%, percent higher than estimated. Not much of a change there. Placements, the average estimate was 98%. The actual was 101%. So we are seeing a little bit more placements coming into play. The average guess for marketings was 102%. The actual marketing came in at 99%. All said and done, probably a little bit bearish on the cattle market Monday morning with these numbers. Hogs seen a quiet trade this week in the front end of the contract, in the February contract. June and July hogs did make new contract highs this week. Margins are very good for that summertime sales area. Certainly an opportunity to get some hedges in place. The PEDS virus still weighing on the market, or still is bringing up concerns. On the opposite of that, though, we are seeing slaughter weights up about 5-6 pounds over last year at this time to make up for that concern here nearby. We did see a cold storage report this week, and we did see larger than expected pork stocks, while we did see beef stocks fall more than expected. Other items of interest: the energy market continued to surge upward this week, propelled by the propane shortage in the countryside. Natural gas futures hit highs this week that weren't seen since October of 2011. The equity markets late this afternoon are seeing a correction the last couple of days. Currently, we're sitting about a 3% correction to the downside. If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.